In order to trade profitably in a consistent manner on a day-to-day basis, you need a specific plan every single morning. In this video, I'll be going over every single criteria that I assess and analyze every morning before I take a trade. We'll look at today's overall market context, the best trade to take, areas of confluence, or in other words, confirmatory reasons that give me confidence to take a trade with my strategy, and at the end of the video, my list of trading principles. So to provide you some context, if we take a look at the ES, that's the overall market, that's the S&P 500 futures. ES is trading between a range for the past week, all between 53.21 and 52.71. If you can take a look, as you can see in the pre-market, it breaks that and goes down further, breaking this level, and it just continues to slide down, giving us an overall pullback. It's just important to make sure you look at, the higher time frame. So that was the hourly time frame. Looking at the daily, you could see that, before the market opened, it was still very red like this. It was about, up to here. So you just want to take a look at, the daily, the 4 hour, the 1 hour, and get an overall sense of the market context. Yeah, on the macro, overall, we're uptrending, but you can see that, we might be due for a pullback, and this might be the start of it. So, yeah, it gives us a huge sell-off in the pre-market. If you take a look at the NASDAQ, this is a basket of the tech stocks that most influence the U.S. market. The NASDAQ futures, it was trading between this range as well. From 18,603 to 18,435, and then the pre-market sells off and breaks all that. And so we're taking note of that. Every day, I aim to take one great trade anywhere in the time frame of the first 2 hours of the market open. So I'm in California, so that'll mean anywhere from 6:30 a.m. to 8:30 a.m. And after that, I close my laptop and go on about my day. Why do I like to trade the first 2 hours? Because that's where the most volume and the most volatility is happening. Just from my experience and what I've observed, this time frame is best with the best kind of price action. Let's get into today's trade. Now if we take a look at Nvidia, you can see that along with the market, it also sold off quite a bit. And Tesla, another very heavily traded stock, also sold off, as you can see. Pretty much 10 points from 175 to about 165 at the open. So that's the overall context. You want to make sure you look at the higher time frames, such as the daily, the 4 hour, and the 1 hour time frames, and take that into account before taking any trade. So taking a look at Tesla, as you can see, and stating once again, there was a huge sell-off during the pre-market. Slid down from 175 to 165. And so right at that key level, or key zone if you will. So I use the 2-minute and the 5-minute time frames to take my trades. So if you just take a look at the first few minutes of the market open, while you're assessing the stock at the market open, you also want to take a look at what the market is doing, specifically the ES or the S&P 500 index futures or the NASDAQ. You can also take a look at the SPY ETF, which is the S&P 500 ETF, or QQQ, another ETF for the NASDAQ. Is the market failing? Is it driving up? Is it maintaining? These are all things you want to take into account while you're taking a trade. So as you're looking at the market, you're also looking to see what the stock, in this case Tesla, what it's going to do. So looking at the 2-minute time frame, you can see that, about 10 minutes into the open, the stock looks weak, but overall it seems like after a very extended move, it seems to be maintaining and kind of chopping, in the same area. Ideally, what you want it to do is kind of break that zone or break that level, pull back, and then further slide down for another move downward. But in this case, it kind of seems like it's maintaining at this level. So I don't really like the price action. Let's move on to another stock, right? And while And mind you, while I'm doing this simultaneously looking at a bunch of different other stocks. I'm just highlighting, what you would be doing in a micro perspective. So I have a bunch of charts with a bunch of stocks that I can look at the same time. And so as you get better, you'll be able to look at different stocks simultaneously, all in real time. So not liking what Tesla is doing, let's take a look at Nvidia. Nvidia, on the other hand, also broke a key demand zone in the pre-market and slides down lower along with the market, and it's overall looking weak. It's pretty extended as well, but you just want to assess what it does at the market open. So zooming in a little bit further, so right here you can see it kind of, it's a doji, so you don't really know what it's doing, but overall you want to take into account the overall trend, which is a downtrend, right? A huge bearish candle with a bearish wick, and then another doji, and it's kind of maintaining this area for about the first 8 to 10 minutes, right? Between 889 and 882. But overall, it's bearish, right? This isn't optimal, but what you can choose to do is once you see this red candle form and slide downward, you can enter here and set a tight stop loss at 888. It's not ideal because it's so, close to the market open, and ideally I like to wait 10 minutes into the open just to get a clear picture of what the market is doing, what the stock is doing, and get a better analysis of the overall context. So it's not ideal, but what you can do is enter right here on this pullback, in order to get the best entry possible and a tight risk. So if you do choose to get in here, you would set a tight stop loss at maybe around 890, a $2 stop, for a further move downwards. So let's say you don't choose to do that and you want to wait out a little more, right? So overall, afterwards, you can see that it's sliding down, continuing the downtrend along with the overall market. If you look at the NASDAQ and the SPY or ES, you can see that it's slowly, the market and the NASDAQ is all slowly, downtrending from the market open, from the gate. So you can see that it's very weak, but getting in over here isn't the best entry because it's already made a move downward. What you want to do is get in a pullback or a retest so that you can set a tighter stop loss. It's all about setting a tight risk, getting a good entry so that if this, stock does move against you, you have a good amount of wiggle room to play with, and overall you can reduce your drawdown during the trade. So you can see it's still overall bearish, and you can see that it's following this EMA indicator that I have. It's the 9 and 21 EMA. This blue one is the 21 EMA, while the orange one is a 9 one. So it's following it, and as you can see, when it's pulling back like this, you can take a look at the volume and see that it's a low volume pullback. And if you take a look at the NASDAQ, which I'll pop up right here, it's also pulling back right around 7 a.m. And so, yeah, sure, it can be a reversal in which the market bounces and then drives back upward. But overall, you want to take a look at the highest probability in what it's doing. In this case, I would be thinking that it was a pullback. So what you can do is get in for a better entry. At the top of the pullback, set a tight stop loss, a tight risk, and look for another move downward. Let's say you choose to make the stop loss at 888. So if the stock goes above that level, opens above it, it invalidates your thesis and you need to get out. On that first leg down, you want to take partials. You want to take your profit, secure them just in case it might bounce on you. It's better for your psychology, your ease of mind, your peace of mind. You want to take profits, you can take it right here, you can take it right here. I took this trade today and I took my profits right here. The premiums reached around $20, from a $16 entry. I'll show you guys what I made at the end of the video. So this over here is the best possible entry right here. Sure, you can get in early, so that you don't miss the move. But as it's pulling back, it's better to get a better entry. And once it invalidates your thesis, all around this zone, you want to get out. So that's what you want to be doing, looking at the stock and the market all at the same time. I'll go more into detail on how to scale out at the end of the video when I go over my trading principles. But you want to take a majority of your position out right here and leave a runner. Once the stock moves down into your favor, it's essentially a risk-free trade because you're taking your profits here, taking a majority of your position out, and you're leaving a runner for whatever it does. It may move lower, it may go back to your entry price, your break-even price. You never know with the stock market. You're never certain. This is Investopedia's definition of confluence in trading. Confluence is a combination of multiple strategies and ideas into one complete strategy. Confluence occurs when two or more separate ideas or strategies are used together to form a comprehensive strategy. This term can also be used when employing technical analysis by looking at charts with multiple indicators or overlays and developing levels where different indicators are combined to help identify possible opportunities. So with your areas of confluence, you want to look at the overall trend, right? On a higher time frame, on the highest time frame, all the way down to the lowest time frame. What was the trend? Identify the trend. Overall, the macro trend is going upward, but as of now, as of the past few weeks, past few days, it's been consolidating within this range. And in the pre-market, it slid down. You don't want to fight the trend. Supply and demand zones, you want to identify them. These are the key zones and levels in which I pointed out in each of the stocks and the ES and NASDAQ futures in the beginning of the video. And so, if you take a look at the stock NVIDIA right here, 906 is a key level, 891 is a key level, 871 is a key level. You want to identify them. These are just, major touch points in which the stock reacts. So, if you look at the past, you want to identify your key zones and levels by looking at the stock and what it did in the past. And the final area of confluence is your price action or candle bar analysis. So NVIDIA, I showed you in the 2 minute and the 5 minute. Let's go to the 5 minute time frame. What was the candle bar and the price action of the stock doing at the market open along with the market, right? It was showing huge bearish wicks and huge selling pressure, indicating that it wanted to continue the downtrend, right? So with these bearish candle wicks and maintaining the downtrend, you want to get in for a good entry with a tight stop and take profits as it makes a move down in your favor. Now on to my trading principles. These aren't all of it, but these are the main few that I've chosen for the video and to share with you so that you can keep it in mind when you take a trade. So the first one is no trading in the market open, especially in the first 10 minutes. So I try to avoid trading in the first 10 minutes, anywhere from 6:30 a.m. to 6:40 a.m. It's almost always way too volatile, and most of the time, it's just a shakeout or a fake out in multiple directions. And so I've observed that it's best to just wait out the first 10 minutes to assess and analyze the market in its overall context and what the stock wants to do. Next one is no trading after 8:30 a.m. Once again, I only look to take one great trade, one amazing trade in the first 2 hours and then close my laptop and call it quits. Sometimes I will open my laptop back at 12 p.m. or the last hour of the market because that's where I've seen volume pick up toward the close of the market and see more volatility. My next principle is to treat trading as a business and to understand that with a business, you need to keep in mind your losses. You must keep losses minimal and stick to your risk management strategy. Know your risk and exit when your stop loss is hit. Do not hold, hoping for the stock to reverse back into your favor, and keep in mind that you can always get out and get right back in if your thesis is still valid. In terms of securing profits and scaling out, I like to secure profits, usually anywhere from 50 to 75% of my position size, within the first leg or the first move in my favor. That way I'm securing profits, and if it decides to pull back or reverse back on me, I know that it's a riskless trade after it goes in my favor because I've taken profits. Leave runners, usually anywhere from 25 to 50% of your position size depending on your trading strategy, and set a trailing stop loss to at least a minimum of your break-even price so that after the stock moves in your favor, it becomes a riskless trade because at the least if the stock moves into your break-even entry or break-even price, You'll get out with no loss and at break even, and the first leg in which you secure profits will make your overall trade a profitable one. Thanks for watching. I'll try to make these videos as often as possible because I think it's super important to understand the overall market dynamic, get the overall context, and along with the macro, also understand and analyze the micro concepts, and have the ability to analyze everything on a day-to-day basis, all in real time. That way you know what to look out for, and hopefully you can maintain or eventually become a profitable, consistent trader on a day-to-day and month-to-month basis. Wishing you the best of luck, and I'll see you in the next video.